Hello, I am Prashant Kothari, Portfolio Manager of the Pictet Indian Equities Strategy. In today's video, we'll share our thoughts on the outlook for Indian equities in 2024 and beyond. There are contrasting landscapes in emerging markets, which can be like a gold mine and a landmine at the same time. Just being a long-term investor has not been a fruitful investment strategy in emerging markets, unless if one has chosen the right country to be in. 2023 was a year of volatile global macro and increased geopolitical risks. In that backdrop, India acted as an oasis for investors and provided more than 20% returns. Over the past 10 years, Indian markets have given 150% plus returns versus less than 30% by the emerging markets. There's surely something special going on there which merits attention. An obvious question would be what makes India stand out and can it continue to deliver? We believe there are three key elements to understand the Indian exception: demographics, policy, and corporate discipline. Let's take them one by one. Firstly, demographics. India is the world's largest democracy with 1.4 billion people. But India is not just populous, also young. About a third of India's population is under the age of 20. An increasing working age population combined with high education levels provides attractive foundations for a skilled workforce that is driving innovation and entrepreneurship and helping India take a bigger share of the global market. That success fuels greater economic growth. We expect the Indian economy to grow around 6% for the next 2 decades. The other dimension of demographics is urbanization. About 250 million people are expected to move from villages to cities in the next 2 decades. Rather than farms, these people will work in factories and offices, driving huge productivity gains. Second point is policies. India is perhaps the only emerging market with a meaningful structural agenda. The government has created an economic model focused on good governance, digital infrastructure, and globally competitive services and manufacturing industries. While India has traditionally been strong in service exports, the initiative of Make in India is helping it win in the manufacturing space as well, especially when global supply chains are looking to move out of China. 2024 is an election year in India, and elections usually bring additional uncertainty to the markets. However, following the victory of the BJP party at the recent state elections, it is looking increasingly likely that Prime Minister Modi will win his third term in power. With the likelihood of a continuation of the current regime and progressive government policies, investors should continue to be attracted to India. The third point is about corporate quality. Wise investors understand that growth alone is not enough for equity returns. You also need profits. And that's again a dimension where India really stands out. Return on equity by Indian corporates are double that of their EM counterparts. This comes from the frugal and capitalistic mindset of the managements. Not just profitability, they're also extremely disciplined when it comes to returning cash to shareholders. We believe a large part of high Indian market returns are explained by this disciplined capital allocation. This confluence of demographics, policies, and corporate quality gives us high conviction on the Indian equity market narrative even going forward. So how do we position ourselves to play and reap the benefit from being invested in India? First and foremost, with a diversified stock market and many potential themes to play, we believe that a high conviction investor is the key. As some wise Japanese said, those who chase 2 rabbits catch not even one. We only chase the finest investment opportunities in India and invest in them patiently. There are wonderful businesses at reasonable valuations with a high ROE and strong, stable growth. We look for companies that have good capital allocation, competent management, and strong competitive advantage. These are the businesses that we believe are well positioned to take advantage of the long growth runway that India offers. Take Suzuki, for example. 40 years back, they spotted the opportunity to sell small cars in India and set up manufacturing plants and assembly units in India, leveraging off India's manufacturing capabilities and supply chains. This investment has not only contributed to the economic growth of India, creating jobs and supporting technology transfer, but has also strengthened the bilateral trade relations between the two countries. The Japanese company took a long-term view on the future of Suzuki. This paid off beautifully for Suzuki. Today, Maruti's market value has surpassed that of Suzuki itself. Our investment approach is similar. We are not day traders. We are investing to create wealth with a long-term mindset. To recap, India is a gold mine of opportunities. It might not be the land where the sun rises, but surely the land where the sun is shining bright and should continue to do so. We have been investing in India for decades now and have fine-tuned an investing approach which works well across market cycles. We remain patient when seeking out new ideas for the portfolio, focusing on powerful themes and long-term growth in a sustainable manner. Investing does not come without its headwinds and volatility, but remaining nimble and focused is how we believe we can keep winning in India. Thank you for listening.